Good morning, gentlemen. I hope you're well. In this video, what we're going to be doing is laying out a strategy to actually yield farm long term and build up a portfolio, waiting for the prices to explode. So, this could be something where you've got some cash, you made some money, and you want to invest it as a passive income source. I always say if you're day trading, if you're buying meme coins, if you're essentially gambling, you need an income source before you can actually get started. This is what I teach a lot of friends, a lot of people I know. Get an income source into crypto and then you can invest, gamble, stock up, etc. If you're using your own money that you're working a job for or your own business, eventually you're going to run out and it's not going to yield as good results as if you had an income stream. Anyway, so what we've got is, or strategy wise, what we're going to do is work out how much you have to invest to actually earn a decent amount of passive income long term. And this is Solana's volume is quite low in comparison to 2, 3, 4, 5 months ago. So we've got, I think I've got one pool open from here, which is earning about $5 a day. And I've only invested $1,200. Now, the yield will fluctuate. Let's say we hit a really bear market. This will probably be $1 a day, $2, $3, that kind of range. On the flip side, if Solana's volume goes up, typically we could be earning $20 a day. So it's give or take depending on the volume. At the moment, I'll say we're in the mid-range volume in terms of the pool being used and the volume equating. So what we're earning right now is about $150 per month. Now that can go to pay your shopping, that can go towards a phone bill, electricity, a gift for yourself, etc. So you could leave that, and it's not a major investment. I think we'd all agree no matter where you are in the world, $1,200 isn't that much in the grand scheme of crypto. So I've got this pool open and I'm going to leave it long term. Now, the negative is our yield can fall and we could go out of range. So we've got a range of $115 between $140. And what that means for us is if it stays in the middle, we earn the fees. If it drops out of this green box, so if it goes to $1.42, we are not earning any fees. It will swap all our money into USDC if it goes up, and all the way down if it goes out to, below $1.15. At that price, I would exit way before then. Anyway, that's a sign that the market is crashing. That's why I picked that range. It will swap it all to Solana. You will still have your Solana, but it would be dropping in value. So you can't be in that pool at that stage. So the better idea, I would suggest, is more long term. And I'm talking long term. This could be well over a month. It could be even a year. And we can go to a pool where two are non-stable coins are pegged together. Now you can see here, this is the 4-hour chart. I think we'd all agree that the range doesn't move as much. Yeah. And we'll illustrate that with a 10%. Now, a 10% change between Solana's market cap and Bitcoin's market cap is unlikely to happen. So you can see all the way, apart from this little dip, all the way since like February, even if you've done a bit larger range, like possibly 20%, we're pretty much in range for months and months and months. And don't forget, you can always take it out and adjust it. If it drops to like here, you can take it out and adjust it, hopefully without selling. Now, the initial investment, you don't want to be selling. Now, either way I win if this goes out of range. It's less risky because if the price drops or Bitcoin suddenly market share goes really high, I get Solana and then I get Bitcoin if it goes up. Now, the yield on this pool is no doubt a bit lower because people don't use swap Bitcoin into Solana as much as they swap Solana into USDC. Now, when the market crashes, a lot of people swap their Solana into USDC, so you earn a lot in that time. So this one will probably yield, if we put in, you might have to put double what you put in. So let's say we put in 10 Solana, we're going to be earning on a 20%, which is a huge range. It's unnecessarily huge, $3. So I would typically do 10 or 15%. And I think that would be pretty safe. It's quite a conservative one. This will likely to stay in range for probably over a month, maybe, and you'll make money in that time. So in that time, you're going to be earning close to $200, 175, something like that. at this sort of volume. If the volume picks up, you can probably earn about 300 off of 2,500 investment. So you have to equate that into what that means for you. $250, can I risk earning that? So it's basically 10% a month you're going to be earning, roughly, I would say. And it depends on, like I said, the volume, something like that. And yeah, so 0.25 per day is not bad. So where it gets interesting, if you put in $13,000, $25,000, you'll be earning $62. Now, not everyone's willing to risk that because I bet in the next year or two, this value, if you invested it, would probably be 6,000, 4,000 at one point. You're going to have an 80, be prepared for an 80% drop, and your yield will earn that. And so my strategy is I'm putting in small amounts, like $1,000 here and there. I'm starting to. If I get $1,000 from trading or $2,000 profit a day, I'm going to put $1,000 into a pool, and I'm going to DCA into pools until it starts to pay for itself. So I was doing this in the bear market. I was staking, actually. I wasn't yield farming. So I was staking assets, and it was to the point where I was getting over $100 a day back then, close to it some days. And I was like, okay, so I'm getting this $100 a day. I've started to spend it. And then what I started to do was I started to buy Bitcoin with it because it was just $100 free. It was just coming in. The prices weren't dropping. And that's what you want. You want to do this at the bottom on the floor. Because what you'll do is you'll accumulate so much Solana, so much Bitcoin, so much, USDC, that when the prices start to go up, you can just start selling them. And every month I've just been selling. I brought everything in the bear market. Yeah, I yield farmed in the bull run. And whether it happens or don't, you got to be prepared. And look, I can harvest this yield. I can stick it back into the pool. I'm sure I put 1,200 into this. So I'm up on my balance already in maybe a day or so, something like that. Obviously, the price has gone up. You can see I probably entered around here and it's gone up and it swapped a lot of it to USDC, which is fine. I'll always take dollars, no problem. I mean, this isn't for me to I would have just sold this Solana, so I thought I might as well just leave. It was stuck in my wallet, so I thought I might as well leave it. And I've cashed out most of my crypto. I'm just holding Bitcoin in theory, and I've got a few thousand. I've got nothing. I've got nothing above $10,000 in a coin, and I've never had that before for maybe 2, 3 years. I'm just holding Bitcoin and dollars, and I'm cashing out most of it into there. So I hope you found this video useful and giving you a tip on how to quit your job, maybe earn a passive income, yield farming. And I wish you all the best and take care.